Thank you so much for hanging out with me for AfroEconomics Live. This is Tax Attack. Yes, indeed. Last year, I remember, or last year was the year before. I don't know, because tax time keeps coming around faster and faster, y'all. But I remember I called this discussion, I love the 1040. And I still love the 1040 form because it helps us get our thoughts organized and it lets us know exactly what is expected of us as taxpayers. That's all I ask as a business owner, as a citizen. Tell me what's expected of me so that I can do it. That's it. I want to follow the rules. I just don't like when rules get changed. I want everything in writing. You know, I've had several discussions with people. I was like, all you have to do is tell people what you expect from them, and then they can do it. But if we don't know what's expected of us, then we can't do that. So when it comes to taxes, I'm going to tell you, there is absolutely nothing to be afraid of. Because, I mean, you can actually even say that you think that something in the tax code is wrong, and you can make a petition to the Internal Revenue Service on why you feel that this particular law doesn't apply to you or shouldn't be that way for you. You can. Now, you have to follow it the way it is, and you have to pay it the way it is. But meanwhile, you could be petitioning that I think that I should be able to write off my dog as a dependent. I mean, you can do whatever you think, and you can actually address that with them. But you can't just write off your dog as a dependent because you think so, and then your dog has no social security number and you try to do it anyway and think that they're not going to adjust your return. They're not going to call you crazy. They're just going to adjust your return and they're going to make you pay the proper tax that is due. So I have up here the PDF, and this will I can kind of move it up and down over here for the 1040. And of course, it starts with a look at who you are, your name and everything, your social. You will be amazed at how many people just make mistakes on this part. That's why it's best to use a computer program, because it reduces, it actually, if you look at research, it says that people that use a computer program to do their tax return are less likely to be audited because they're less likely to make an error, at least in some of the errors. But if you type in the wrong number, you know, the computer can't help you with that. You gotta have your socials, your spouse's social correctly. And then you go on down to filing status. Goodness gracious, y'all. Filing status. Now, filing status is right under your name. Now, who knows? Like, everybody knows what it means to be married and not to be married. But you would be amazed at how many people are married, but they don't do their tax return together. And they don't understand how much it is costing them that they do married filing separately. And then it says enter your spouse's social security and their full name here, because they want to make sure that both of you are being penalized for doing married filing separately on that return. This filing status is so important. I sat down with a member last week and I was looking at last year's tax return. And I was explaining to her that she was a stay-at-home mom, so she didn't have taxable income. So the crazy tax preparer put down her and her husband as married filing separately when they're very happily married. She just didn't have any income. I thought that was the most ridiculous thing. One of the most ridiculous things I've seen. I've seen a lot of things. I have found errors on people's returns that are in like over $10,000 errors in their return. So we have to be very careful in making sure that even if you've hired someone to do the return, be aware that they're human also. They make mistakes, and you need to be careful and make sure and get an understanding. So what I suggest with all of my members of AfroEconomics is for them to send me the PDF of their tax return before they actually hit the submit button. Stop going to the tax preparer on that day or allowing the tax preparer to stall, put your paperwork off. You gave it to them in January, but they're telling you on April 14th that your return is ready. Don't allow it to happen. I had a tax preparer that did that to me for 15 years for my business and corporate return. Then he'd get to the due date and then he'd say, oh, I'm filing an extension. Seriously? So he definitely he got fired. So we definitely need to understand that, and because of that bad experience, I started really taking control of my understanding of corporate taxation, individual taxation, having an accounting degree. I did a double major undergrad with one of the best business schools in the country, and I was still paying like $3,000 a year for the tax return. I mean, seriously? And you're putting me off? Till I got frustrated. But if I didn't do what I do and didn't have the experience and the confidence in that area, I do suggest that business owners find someone that they trust. And I do have a tax preparer that actually helps me with some of the things that I need, like for sales taxes and 1099s and things like that. But as far as doing my returns, I enjoy making sure that I'm on top of my game and understanding all of the tax forms and the regulations that are involved in my business at this point. I can't say I will always do it, but I enjoy doing it now. Now, okay, so I want to go through this, and then we have some questions, and everybody raise your hand if you have a question for me or type it in. But I want Miss Raspberry and I want Miss Guy to come on live with us in a few minutes. So we have the 1099. The 1099 would be in this income section. Well, before we go to the income section, remember, it starts with your name, your filing status, any exemptions you have, your spouse, dependents. It tells you everything. Get a printout. Make sure you know what's going on. I know that they give you this little questionnaire and you don't have the slightest idea where each of those things that you're putting on the questionnaire go. But get the 1040. Ask me for it. Email me, jb@jbbryan.com. I'll send you a PDF of a 1040. But you need to know this. And then, now I'm not saying that you need to do it. I'm not telling you that you need to do your own return. I'm saying that you need to understand what that computer is doing and why it's asking you those questions. Always go to the why, the root of the question. So then your income is the next section. Wages, salary, form W-2s. That's in this one. Number 7, it says wages, salaries, tips, W-2 income. And then it goes on down to ask you all about different forms of income. And then a tax-exempt income, taxable interest, dividends that you may receive, qualified dividends, taxable refunds, credits from state and local income taxes, alimony received. There's going to be differences in that for 2018 because now, right then, in 2017, you had to pay taxes on alimony received. Now, the new people divorcing this year will not be able to write off alimony that they pay, and the receivers will not have to pay taxes on the alimony that they receive. That line will be gone. Like child support is not on here as a form of income. Business income from your Schedule C goes back over here, business income or loss. So you see how you have a business that you're starting up and it's generating a loss, it's reducing your income right here. And then capital gains or losses, then IRA distributions. Yep, money that you take out of your retirement account right there. The rental income from real estate, the Schedule E, you have to do a special form for that, like the Schedule C, the farm income or loss, Schedule F. It's not hard. And then you go to the schedule, you have a farm, get income or loss from your farm, Schedule F. Go to Schedule F, it says income from your farm. What were your expenses with the farm? Then it says whatever income was left over after the expenses from the farm. That's it. Unemployment money you received. Did you get money from Social Security? So you may be 67, still working, getting a Social Security check and getting W-2 income also. So you got to put that in there. And then it'll tell you the taxable amount of the Social Security benefits, because some of it may not be taxable depending on the amount of income that you have. So, and then you go down to your adjustments to your gross income. So then you'll have expenses that for educators are deductible. And then all these expenses are going to be different after this year. So this 2017 1040 is going to be different than the 1040 for 2018 that we're going to look at, right? So we have another question. Good. So if you have a tax bill for the year, is there advantages to, okay, great. 1 second, stay with me on that as well. We're going to keep on it. It's talking about, that's a good question. Keep asking me the questions, because I'm telling you, I just promised that I was going to go through this 1040. So I hate when I describe something and I don't do it. So you looked at your expenses, then you're on the second page, going back to the top, tax credits, and then you just go through tax credits like itemized deductions, where you look at the itemized things on your Schedule A. And you know in 2018, you're going to have less itemized deductions. Any exemptions, then you go on down, alternative minimum tax that must be paid, and they give you all of the calculations for all of this, education credits, retirement savings, contribution credit, child tax credit, everything, and just go on down, down, down. And see, the computer is helping you if you use a software package, and some of those will do your return for you for free. So make sure, if it's a safe company with a good track record, consider using them to do your online return, or ask a friend that is doing well and is happy with their tax preparer to, who would they suggest? Always, make sure that you investigate. Know that I am not a tax preparer. I am a tax planner. AfroEconomics is a comprehensive financial management program, so that we look at everything throughout the year. So what we have to have the tax planning strategies, so that when you take the info to the tax preparer, we know what's up. We know what we need to do. So go on down and have your any payments that were made, that already were paid during the year. So you look on the W-2 form and it will say you've already paid this $10,000 in taxes during the year. You put that down right there, so that goes into your payments. Going down to question number 64 through 74, just payments, then refunds, and then direct deposit on how you want to get that refund, or the amount that you owe. Might happen, and it's okay to owe a little bit. It's okay. That means that you did it just about right. When you get a whole lot back, that means you had money that you could have been saving or investing all year long, and you just don't have it exactly right. So if you're getting a big check back, we need to look at that return and see what you can do to manage your funds better. What needs to be corrected? Are you withholding too much? I mean, imagine if you're getting this big check back and you've been paying interest on a credit card the entire year. So when you get that back, see how important it is for you to take that check and pay off that credit card balance. That's an automatic return on your money. And then you sign the form. Amazing how many people forget to sign the form. And then it says, if you have someone that you're paying to prepare your return, their name should be right there. Right there. Right there. Look, and then it says that firm, that tax preparer, they should be putting their tax ID right there, their phone number, and everything. Be careful if you're paying someone to do your return and they are not willing to put their name on your tax return. You're moving forward at your own risk. Do not do that. They can volunteer to help you all they want, but if they're charging you, that is a paid tax preparer, right? That's all it said. paid prepared use only. So think about that. Think about that, because I hear all the time, unfortunately, oh, so-and-so, but I look at the return, so-and-so did it, and there's no name on that return. That means they are not responsible for what they did, what they put down there. So make sure that everybody is responsible. Let's go. Let's look at some questions. All right, Ms. Guy, I'm bringing you up. And then, Ms. Raspberry, I'm gonna find you. Thank you so much. I'm gonna let Ms. Raspberry. Look, Ms. Raspberry, I want you to go first for us.
Oh.
Yes, indeed, sis. You got some questions regarding charitable contributions. Talk to me. I can't believe you turned off your camera. I hope that everybody that knows you looks up there. Look, girl, you're supposed to be helping me. This video is going to go viral. Oh, that's where you said nope. Oh, that's what you were saying. No thanks. Just wanted to get the question out there. I love it. I didn't read that part. Look at see how I treat members. We want to discuss charitable contributions. So you want to make sure that I well, tell me what you were thinking.
Lord. Where is the chat? I'm coming.
Okay. Yes, indeed. Miss Guy, you have your question?
Ooh.
Miss Guy?
Yes.
You ready?
Yes.
That's all right. Yeah. Miss Raspberry being shy, but she's not. Go ahead. What's your question today?
My question is, if you are using your vehicle, because I work for AfroEconomics, which means I am all over the state of Virginia from Sunday to Sunday. So what can I use in reference to my car as a tax deduction?
If the person that you're doing work for gives you a 1099, then you're doing a Schedule C. Do you receive a 1099 or W-2?
Yes.
You see the 1099, then you really shouldn't say I work for XYZ, because you don't. You have your own company, that because you're in they're contracting you among other products you could be contracted with.
Exactly.
So you can write off, your business expenses on your Schedule C, which can be a lot better for you than the employer-related expenses that are itemized that are about to disappear, so you can,
yes.
The Schedule C is going to become more and more important. And I'm trying to explain the difference to members as it comes up, that if you are a 1099, or if you have a W-2 and you work for someone. So if you worked for them as a W-2, but you also had a separate agency, and you were getting some 1099, you can still use because you can have some 1099 income and W-2 income, but your business expenses starting this year will be on your Schedule C.
Okay.
Does that make sense?
Yes.
Yeah, great. And then you'll be glad. And 1099s can be great, as long as you learn how to really take the business seriously and maximize all of the deductions that the government has for you. Definitely. Thank you. Great. Miss Raspberry, what you got for me? What you got for me, Miss Raspberry?
Okay. I was just wondering if there were any changes in 2018 on charitable contributions.
The charitable contributions have been really protected. You know what I mean? There was a lot of talk about, people were really afraid of that. Like, there are some, but you still get the benefit of doing charitable contributions. I'm gonna look up 2018 charitable contribution changes. Let's see, the nonprofits worry tax changes will curb donations for 2018. But you're still, and I think it was because people notice there's not going to be, this is what it was, because there was people felt like, well, the nonprofits felt like people only made contributions to nonprofits because of the tax deduction. So with the standard deduction doubling, there are going to be less people who are going to itemize, you know what I mean, or get the benefit of itemizing. So if you do your charitable contributions and your mortgage interest and whatever other things that you have to itemize that are still be approved for this year, and then you see that it's still not as much as the standard deduction. So say your standard deduction is $12,000, right, and with all your charitable contributions and interest, everything, your itemized contributions are only $10,000. So the person, they're afraid that people will say, well, dag, I'm taking the standard deduction. Why should I even give that contribution anyway?
Okay.
But I believe that you give to your church, not for really the tax deduction, right? Because a lot of people are giving to their church and right now are still taking the standard deduction and they don't even realize it.
Right, yeah.
You know, so just because something is tax deductible doesn't mean that you are actually getting the benefit. Like, oh my goodness, like I would say the overwhelming majority of homeowners that are paying interest are not getting the benefit of using itemized deductions. They're still taking the standard. You know what I'm saying? Yeah. Because they don't have all the other ones. They don't have enough to be larger than the standard deduction. And now the standard deduction is being doubled for this year.
Okay.
Yeah, but good point.
Thank you.
Oh, thank you. And thank you for allowing me to bring your blank picture up. Y'all are so good. Thank you. And I don't know how to bring you back down. I'm gonna try so that you can relax and not feel like you can't, like you're scared, you're afraid to walk around the house probably right now. Like, can she see me? I can't see anybody, but I will. Y'all just hang out with me. But I cannot see anything. Thank you. I appreciate y'all with these good questions because somebody's benefiting from it. We have a question from LaWanda. She said, how do I handle this situation? Because I don't have a business. Let me try to see the top part of that question. Okay, let's go for the top. Well, I'll go back to the LaWanda's question. The first one was, if you have a tax bill for the year, is it advantageous to open an IRA account to reduce the tax burden? Are there earning limits for this choice? By the way, my camera is off. It's like, don't bring you up, right? Definitely, your IRA contributions will reduce your taxable income. And if you are not an active participant in a work plan, then you can get the full deduction, regardless of your income of your IRA contribution. Of course, as long as it's in the maximum, contributions for the particular tax year. But yeah, you can make contributions in an IRA for 2017 up to the time you file your return for last year. So you have till like April 18th of this year to make sure you would have your setting up an IRA. I would need it before then. It's like right about like now you need to be opening up that account. Then I would love to help you set that up. But you can get the benefit of last year because we do paperwork that says this contribution is for 2017. And then you write that off to reduce your tax bill, to reduce your taxable income. Indeed. So as you know, my spouse is in a union and he worked at home. He needs to purchase supplies to perform his duty. All these supplies he purchased, he was reimbursed. So it has employer related expenses and was reimbursed. Because of this reimbursement, wow, they gave him a 1099. That's, woo. Can you suggest a moment of tracking tax items? So then how do I handle, somebody asked the question right in the middle of that, and that's funny. So how do I handle that situation when he doesn't have a business and he's got this miscellaneous 1099 income? It has to go on the top of that 1040, right in the income, a section for the 1040, under the W-2 income, of course, but the 1040 miscellaneous, the 1099 miscellaneous is on the 1040 as a, and you definitely will have to count that as additional income. If you have any expenses associated with working out of your home that were not reimbursed by the company, you could still, effective last year, you can still write those off. So be very conscious of that. Your office use, any equipment you purchased for the office use that was benefiting the union. Because just because they're reimbursing some doesn't mean they reimburse for everything. So that way, hopefully, that will help with reducing that income. So don't hesitate to write off the things they did not cover. Can you suggest a method of tracking tax items during the year so that at filing time, the essential information is easy to access to fill out the taxing forms? Is this a particular software application that you suggest? I like Quicken Online, like the QuickBooks Online, the online QuickBooks. I don't know, it's owned by Intuit, but whatever, that's the one I've been using for a lot of years. And they upload directly from your business checking so that you can see and you can create the accounts and create your ledger, right there. And a lot of the expenses that you have as a business are repeated expenses. So when it gets uploaded again, it goes right into the slot that it should be in. You don't have to repeat the work over and over and over. So I like the quick, I think it's called Quicken Online, but it's owned by Intuit. It's their online. It's like QuickBooks Online. So we got that one. I know this is filing time, but would you talk about properly filling out the W-4 at the beginning of the year? The W-4 is to fill out your withholding for your employer. So I don't know if you have to fill it out every year. Some people fill it out only the one time that they get the job. And then you have to tell them, I want to update my withholdings. So you don't have to think of it as a W-4 form. But if I say, wow, you're not withholding enough, that's why your tax bill is so much, because when you and your spouse put your income together, you're in a whole different tax bracket. But when they withhold during the year, they don't know how much money your spouse is making. So definitely make sure that you update if you find that you're not withholding enough or there's some adjustments that need to be made. And once a year would be great to do that. I'm sure your employer will allow you to do it as much as you want. If you have secondary W-2 jobs, what guidance would you offer for withholding? This bumps me into a higher tax bracket. Exactly. That's what I was saying about it could be a spouse that's doing that. So we need to get together. That's the benefits of becoming a member of AfroEconomics. This particular anonymous attendee has a lot of questions, and that's the kind of thing that I can help you plan for throughout the year. Akila asks, I have been terrible at keeping up with my expenses and receipts for business. What's the best way to backtrack and get an account of the expenses so I don't have all of the receipts? If I don't have all the receipts in order, bank statements, I'd say only purchase things just with a particular PayPal account for the business or a particular debit card for the business or a particular credit card for the business. That way you always have a recording of everything that you bought for the business. So I think that way you don't have to keep up with receipts. That's so old school. And half the people don't even want to give you a receipt like they should. Make them email you the receipt. But that way you'll have the statements, get all of your bank statements online. These banks are a trip. They want you to pay to have online access to your statements. It's amazing, and I pay it. So it's like that. But anything that making sure that you keep your personal separate from your business, then it'll be good. Even if you did get behind a month, your personal and your business are separate. So you don't have to remember anything. You will have your business ledger right on your business checking account. Good questions. Very good questions. Y'all are terrific. Anybody, make sure if you have any more questions, ask me now. We ran over a little bit, not all of my stuff. So tax preparation, going over, making sure that you have all of the income, all of the information about your income. Make sure that you have a record of all of the adjustments to your income. Make sure you check out what are the itemized deductions and credits that you can get as of last year. And then we're going to have to do this again soon, talking about this year. But right now, I'm just encouraging you to get 2017 correct. Make sure, so those itemized, and then make sure you know any taxes that you've already paid, state, local taxes, real estate taxes that you paid through the year, personal property taxes that you paid in 2017. Keep up with that. Keep a positive attitude, y'all. Your positive attitude about the new tax changes. Don't allow yourself to be exploited, because there's changes that are going along. There's nothing is going on that we do not have access to make sure that we understand it. That's what I'm here for. So claim all of every tax deduction that you can. If you have a business, take it seriously. Do the Schedule C on that for the 1040 Schedule C form and write off those business expenses and record that business income. Handle your business correctly. So if there comes a time where you need to prove that your business is legitimate because you're looking for investors or you're looking for, you want to buy some equipment, the faster you do that tax return, the more legitimate your business is going to look to potential investors and down the road. So plan today for what you want to accomplish down the road. Remember that just because you buy an investment, that didn't create a taxable event. Make sure that you talk to me about what activity in your investments is taxable. Also remember that if you have an investment that is not in a retirement account and it pays dividends, that is a taxable event, even if you reinvest those dividends. And that's a big misunderstanding because people go, well, I reinvested it. That has nothing to do with it. It is still a taxable event if it's not in a retirement account. So check out every tax deductible event, as one person asked about how do I take full advantage of doing an independent retirement account if I don't have it at work? How do they take advantage of it? So to make sure that you check out all of the things that can allow money to grow tax deferred and that allow you to get tax deductions. Because sometimes just avoiding the taxation of something, meaning it's tax deferred, so you're not going to pay taxes on it until later, and it might not be tax deductible, but you still aren't paying taxes on those earnings until retirement time or possibly never. So make sure you understand that in investing, we have to take full advantage of what is this money for? How do I make sure that I avoid taxation? If it's for retirement, we need to invest it in a retirement account. You all have been great. It's just fabulous. Thank you all so much for everything. Any questions? Y'all good? Y'all good? Y'all good? All right. Thumbs up, everybody. I'm going to look one more time at your Q&A. Y'all had so much stuff in there, and I didn't even empty it out. I love the participation tonight. Thank you. I thank God for you. Make sure you make it a great week for you. I'm JB at AfroEconomics.com. And if you have any questions, personal questions, because taxes are very personal, get to know that 1040, get comfortable with it, print it out, look at it, use technology, get involved in seeing what software out there you feel most comfortable with. If you want my opinion, email me, let's talk. Consider joining AfroEconomics. We'll have family, individual, entrepreneurship, Gianyame membership, all types of different memberships. So check them out. Have a wonderful week, y'all. Be safe out there. It's weekend now. Happy spring. Bye. Thanks, everybody.